Welcome back to the Foundation Capital Finance Channel. Mitch FPV here, and we are happy to have you guys. And right now, you guys have been seeing a lot of our content on Instagram and talking about our unit prices. So right now, our unit price is $13 a unit. That kind of works like a share. And a lot of you guys have been asking, how does that even work? Why is it like that? When we originally started, we launched our REIT in 2023. We started at a $10 unit price, and now we're at $13 unit price. You can see that the value has been going from 10 to 13. And right now we're in a final audit of the year. Our year end is kind of right now. And our investors are anticipating what the next unit price will be. But guys, a lot of retail investors don't even know anything about this and how this all works. I wanted to throw it up to you guys to kind of dumb it down for the audience to see, how does this share price even work in private real estate?
Yeah, for sure. I guess I'll jump in real quick, Mitt. Essentially, the share price with our units is based on the net asset value of the portfolio. So our job is to increase and improve the value of the underlying assets in the portfolio, which very simply then generates a return for our investors. So whenever we say 15% targeted return, 7% fixed distribution, and we target 8% in appreciation, that's by us improving the value of our portfolio by at least 8% on an annual basis. Now, when it comes to the year-end audit, the auditors are performing procedures in order to substantiate our financial statements that are being presented to our investors to make sure they're accurate, or the accountant technical word is they're free from material misstatements. So they're not misstated, and any investor can look at those financials and make an informed decision when it comes to their investment, and is the numbers that we're presenting accurate. So with the auditors, they perform all kinds of audit procedures to verify each of those financial statement line items, but specifically when it comes to the asset values of the properties, they check the math that goes into the actual independent appraisals, or they even engage their own valuation team to stress test those valuations and make sure that they're accurate and in accordance with us. And that's what can take a lot of time when it comes to the year-end audit. And that's how you can be rest assured that the numbers that we're presenting are accurate as well. Anything you want to add on the valuation piece there, Mitt?
Yeah, for sure. I think part of being a really good operator is that we know how the buildings are valued based on the methodology that's utilized by appraisers, right? Like, that's how people know their buildings. They know how much rent is coming in minus the expenses. That gets you your net operating income, and then you have a range of cap rates. And so when you're wondering, like, what's with, Foundation Capital's AI brain and all of this stuff and what's going on, it's like we're looking at various data points of other properties that are being sold, traded in the market. What are things being built for? So you have a range of cap rates. So if you look at like the CBRE, Colliers, etc., like these other Cushman & Wakefield's, like larger real estate brokerage firms, they publish quarterly reports that say this is what the cap rate is for a low-rise building, mid-rise building, high-rise building, whether it's wood, concrete, etc. Altus has that information as well for like building new buildings. So we ingest and process that information constantly. That's why it's not a, all the information on day one, and that's what you're doing. You have to constantly reassess what's happening in the market, depending on where things are. So if you're an investor back in 2020, 2021, how you made a return is you were hoping that your cap rate, because the demand was going down, right? Some people, a lot of operators weren't actually turning over units. They weren't actually doing the work that they were supposed to do. And so by cap rate compression, the cap rate going down, they were able to make money. Well, now in a higher interest rate environment, or in an uncertain environment where, people have been selling off properties, there hasn't been as much volume or activity, you've seen cap rates go up. And so it's like a inverse of the cap rate. And it's no longer compressing, it's decompressing. So a lot of the people who didn't do anything in their building values saw their buildings value go down. Mm-hmm. We at Foundation Capital don't bank on any of that. We just say, okay, at the end of the day, as long as we keep driving net operating income up, we can outbeat the decompression component. So even if it decompresses and say the cap rates change and your value goes down $1 million, well, it doesn't matter. We can go and generate, $8,000 to $10,000 a month more in net operating income. That's going to totally offset the value of the building change from that component. And so that mix is a huge assessment where, auditors line by line are validating the rental income, all of the different expenses. They're looking at different comps for all that stuff. And all of that goes back to baking into that value. And so it is stress test across the board by both the appraiser, the auditors, and then obviously us as management on a constant basis. And that's what allows us to know, okay, do we buy this building or do we not? What do we have to do to make this work? And I think that kind of covers how you navigate, cap rate compression and decompression. Obviously, right now in a market like this where it's not as hot, it's a great time to buy deals and make it work, if you can make it work by doing these forced renovations, increasing the number of unit counts within these buildings and creating that value. Because later, as the market starts heating up, you'll see that compression, and that's just a bonus win for our investors, especially as interest rates come down further.
Yeah, I think one thing to highlight there, Mitt, is when it comes to doing what we do and making money with apartment buildings, there's two key components. And the one you just touched is being able to underwrite the deals, make sure that there's the potential for us to increase the net operating income and for this asset to ultimately be worth more. So then we make money. So there's that component, being able to do the math, being able to find good deals and underwrite and do it. Then there's a second component, which is actually executing on those deals, where that's another place where people fall short. They'll buy a building and they see, okay, cool, we have the potential to improve this building's value by $160,000 a year in annual net operating income, which will translate to a $3.4 million lift. But then they're unable to go and get the 10 turnovers that you need in order to do that. And that's just strategy, negotiating, there's a lot of problem solving involved. So even though the math says it's possible, you got to be good as an operator to actually execute it and make that happen. And we excel in both of those categories, which is where we can attribute our success to date. It's one thing to look at a spreadsheet and say it's possible, but you got to also then turn around and be able to do it. And we saw a ton of people in 2021 through 2023 get stuck not being able to actually execute, and that was ultimately their downfall.
Man, I'm still seeing realtors send out deals right now being like, here's a spreadsheet, here's what it can be. And I'm like, dude, you've already got the lift. There's 2 people left. For the average person trying to buy this building, and they're not going to be able to do it. This is terrible. This is the only person that's cashing out is the existing seller. Not the buyer is just going to hold the bag. So
yeah. And then Jeff, I'm sure you can speak to this as our primary deal hunter and acquisition specialist. During that peak time, we would do the math and say, okay, this building can be potentially worth this price. Now, in order for us to buy this and make money, here's our max ceiling that we can afford to pay for this. And then you'd see other bidders come in and pay way more and actually pay what the future price of this building is going to be and leave no meat on the boat for them. You saw that all the time during that hot period.
Some of the best deals we made was not making the deal, right?
Yeah.
There's so many deals that came across our desk in the last 6 years, and we could have chased something shiny, but no. Mid said, no, Jeff, we cannot do it.
Yeah, and I think that's why that discipline when it comes to deploying capital and saying no is very important to make sure we don't get stuck in a situation where we're in a
an investor listening. I hope this is peace of mind for you that we do have a very good due diligence process. And so the audit's wrapping up right now. The unit price is $13. Still got time to get in. You go to Equivesto right now, our exempt market dealer. Get your subscriptions into the private real estate trust. That's all running perfectly right now. Life is good over there. But we got something else on the go as well too, fellas. Development. But we're developing, not condos. Rentals, which is our bread and butter, right? So we already have Dev 1 full, and now we're moving on to development number 2. And that list is already getting a waiting list right now as well too. So we've been doing a lot of webinars and stuff. You guys are watching this for free on YouTube, but if you're on our mailing list, you get the private webinars coming to you guys. So make sure you guys sign up to the webinars, sign up to our newsletters. But development 2, big things coming right next door to development 1. And I don't know how much we want to share publicly. I'll let the master talk about it.
Oh man, there's a lot of interesting stuff, right? I think as everyone saw, as we covered in Def on 1, is that we're taking advantage of the fact that there's been redevelopment in London in regards to the bus rapid transit, and there's a desire to build more housing along these rapid transit corridors. We've obviously had Mark Carney get his majority recently as well, and if you know anything about the Liberals and what they've been trying to make happen is, really like quick transit cities where people can get around on transit and live near transit and be able to commute within, I think, 10 to 15 minutes, or like 15-minute cities or something like that is what they were looking for. And so there's a lot of federal dollars that are being allocated across the board, across all towns and cities, etc. One of the core markets that we focus on, London, Ontario, is taking advantage of that and is implementing that. You've seen a lot of that stuff in Toronto, GTA, but that's not a market that we focus on. In the London, Ontario market, we also know that there is a affordability crisis that exists, in the sense that a lot of the new builds and towers that are coming up are for luxury. It's out of the grasp of many hardworking Canadians that make, that $50,000 to $75,000 a year mark, where they can't afford a place to live, because all the new ones require, even if two people making that, they're not really going to be saving that much money, right? If they have a vehicle, etc. So the area that we've targeted is obviously offering rents that are meeting at the average market rent, so it's affordable, and then we're creating permanent, deeply affordable units as well, to address the needs of the community. We've got people in the community that need stuff that isn't market, and they have their own challenges, and we as a member of the community are looking to help resolve those issues and working with not-for-profits to help provide the housing that's needed to the various folks in our society. So that's what's been really exciting with development. Development has led to our affordable housing fund as well, where we're looking to fund basically our projects, but also other developer projects to create permanent affordable units across Southwestern Ontario. Unfortunately, a lot of the grant programs are only for 20 years, so that some guy in a spreadsheet can pencil numbers out. We're trying to make it so that this problem gets solved permanently, so that way, it's not like every 20 years you're gonna have to go through new affordable units. These units will exist that people can call home. And yeah, basically, I think what we're looking at doing is providing that home life cycle to an individual, where they can start to finish with us during their apartment journey before they transition into purchasing their own home, if that's something that they choose to do. At Foundation Capital, we're basically making that become a reality for people and helping guide them along that way as well.
Yeah, it's really cool. Just to add on there, like, we're serving housing at every category except luxury. So, we got our workforce existing housing that's already been built. We're building for workforce as well. And then now with the affordable housing fund and even the affordable units that we're contributing, we're really helping people make housing more affordable. Yeah,
really addressing that affordable housing crisis is, I think, the only way we go forward as a society. I know everyone right now is thinking like, it's fine, it's not my problem. But listen, when the robots come, you'll want a place to live that you can afford. So you'll want some nice affordable housing.
Well, and what I love is Foundation Capital always takes a simplistic approach. Like, even in the trust, it's just a 3-story walk-up rental that we renovate and re-rent out. Not reinventing the wheel. That's been done. We're just executing on it. What are we doing with development? We're putting up a tower on bus rapid transit. That's not new in smart real estate investor spaces. Like 15 years ago, I sat in seminars where they said, buy a house on the bus route, like, or the subway stop, Now we're just doing it in development, right? And then again, you're touching on the luxury. That's the market that's going to come crashing down, because people just can't afford that. And we have the baseline, the foundation. So a lot of peace of mind for our investors of what we're doing. And just sticking to the fundamentals of boots on the ground real estate investing, and now putting it towards development, which, yeah, it's very exciting. And I got to go to one of the sites that recently, it was a precast site where I walked through the whole thing. They're just putting up the walls. They can do a whole floor in 3 days. This is with humans. It'll be with robots in 5 years, but right now it's with humans and cranes. And they're putting up a floor that, just like Lego, putting it together. So we're looking at people that we're gonna contract to build our superstructure. Also, fellas, I learned a term. You have a topping out party once we build the superstructure, we have a party on the top floor. So to all our investors, we'll have a top floor party once the superstructure is done for Dev 1, and then you have the chance to get into Dev 2. So make sure you hit up me, Mid, or PV on that one.
Man, I have a fear of heights, so I don't know how I'm going to do on this, but yeah, let's do it.
We have a ground floor party for you.
Yeah. Actually, Jeff, it's interesting you bring up Precast, because I've been discussing with a lot of our potential investors how powerful Precast is when it comes to reducing typical development risk versus cast in place, which is the normal way to do things. And that's when they're bringing concrete on site, pouring it and putting up the tower slowly, floor by floor. There's opportunity for cost overrun with that.
You get the cheaper bill first, right? Like,
what's that?
It's a cheaper bill first. I think that's the cheaper invoice.
Yeah,
right?
no, that's what I'm saying. Like Precast is significantly more cost effective because it's pre-made at the factory and set and keep it together.
Well, it comes with the windows in it too. So you might get a someone that wants to bid on the contract to do it right on site. Like you said, pour the concrete, but then the weather's involved. You got to get those windows from China. They're late. This broken. Your one falls onto the road. Now you're getting sued. All this this extra stuff. Whereas the Lego man comes and just Legos it up. Yeah, I'm pretty impressed with it.
Yeah, for sure. There's cost certainty. There's the speed. You don't have to worry about weather. So a lot of benefits. The only negative benefit that I've ever seen people talk about is that the lack of how customizable it is from interior. But again, we're not selling condos. It's not an end buyer who's going to be purchasing this and caring about the design. It's people who are desperate and in need of housing. So customizability isn't going to be an issue for them. And still, they're going to be nice units. They're just not going to be to a luxury.
Are you saying like somebody wanted a 3-bedroom condo, so that's what they're creating?
Yeah, or like somebody wants a particular facade for the building so that it looks nice, like a glass tower or something like that, which we don't care about that. We just want good units for people to live in. You know what I mean?
Gotcha. Yeah. Oh, I see. Yeah. Yeah. Because for the most, I guess condo owners would have that. Oh, my building looks so beautiful. We're renters. They rent our 3-story.
But I think most people who got into condos got into a pre-con, so it's like they don't even know what it looks like. They just look at a.
They were selling it, right?
Yeah. Perfect.
And I think one of the great parts is, like, especially with the system that we're putting in place, we have a number of styles of units as well. It's not just one unit mix. There's like quite a bit of unit mix to, again, address different areas of the market. And one of the exciting stuff that I think that is interesting for us is we're also looking at innovative renovation methodologies to address the affordable housing stuff. So you'll probably see that out of Foundation Ventures, where we are working on construction and real estate related ventures to improve the building and renovation process. So who knows, maybe you'll see us up on stage somewhere.
For sure.
All right.
Awesome.
We got investor calls, so we got to go.
Yeah, we're wrapping it up for today. Catch you guys next one.
Join our newsletter.
Subscribe.
See you guys.